Hello, Kurt Jackson, retirement income strategist with KJ Financial in Liberty, Missouri, here with this week's Your Money Matters. And hey, we missed last week. The holiday weekend got me. I was doing softball with the kids all weekend, and I just didn't have time to get one out. So I apologize for that, but we're going to come strong this week. This week, we're going to channel my inner 20 years of the mortgage industry. You know, one of the biggest concerns people had when they bought a home or owned a home was, you know, what if something happens to me, or what if something happens to my spouse and we're not here, we're not able to help, pay for the house. And that makes perfect sense. I mean, if something happened to us, we wouldn't want our loved ones to suffer, right? But when we say this, when we talk about this, what's really the main thing that comes to mind? It's dying prematurely, right? Okay, but is dying too soon the only thing that could happen to you or to your spouse that would make it difficult to make your house payments, to pay your bills, or, in general, just to keep up with things? Maybe even keep your kids, would it keep your kids from maybe going to college? So what if something happened to you and you lived, right, but you couldn't work for a period of time, or maybe even permanently? Wouldn't that mean a loss of income and a financial hardship on your family? If you qualified for Social Security disability, the average check's around a little more than $1,100 a month. Would that really replace what you lost? Plus, that part of Social Security is really hurting, and I know they're going to be going through some changes there. We don't know what they're going to be, but they're going to have to. Social Security also typically only helps out with a permanent disability. What if you're down for just a few months? I've seen study after study about how long our savings would last if we lost our income. And while their findings are, vary a little bit, I don't want to say all over the board, but they vary. Those numbers are horrible. How long would your savings last if your income or your spouse's income went away? Is dying prematurely really the biggest risk you face? What if you have a heart attack? The CDC says someone has a heart attack every 34 seconds. And InsureMe.com says the average total cost for a severe heart attack are upwards of $1 million. What if you have a stroke? The American Stroke Association says someone has a stroke every 40 seconds. What if you get cancer? StandUpToCancer.org says men have a 1 in 2 chance and women a 1 in 3 chance of getting cancer. What if you become temporarily disabled? What if you lose your sight? What if you become paralyzed in one or more limbs, or you lose a couple limbs? What if you contract something like ALS, Lou Gehrig's disease? What if you're not able to do 2 of the 6 activities of daily life, thus qualifying for that moniker of needing long-term care? What if you end up with Alzheimer's or dementia? Wouldn't all those things severely reduce your income? Wouldn't that put a financial stress on your family? Aren't one of those things more likely to happen than dying prematurely? Now, don't get me wrong or misinterpret what I'm saying here. I'm not saying you don't need life insurance, okay? Clearly you should. What I'm saying about is, what about having some financial protection if one of these other things happen to you? Now, if you're like me, you're sitting there thinking, oh, of course I'd like to have that type of protection, Kurt, but come on, man, I'm not made of money. How could I afford to have all that protection? Go ahead and admit it. It's all right if you're having those thoughts, okay? It's human nature. I thought the same thing when I was doing some research on this. All right, so we can all admit we'd like to have some financial protection from these types of risks, can't we? Okay, so we just don't think we can afford it, right? What if you could? What if it was really, really affordable? What if you could have protection from these types of things with a costs in the neighborhood of what a term life insurance policy costs you? What if you could have the protection and the protection from dying prematurely all wrapped up into one thing? Now, it isn't going to pay for all those things, all right? It'd pay for one of these things, and it'll typically, depending on what it was, leave a nice chunk of change if you died. Not a huge one, but a nice one, okay? Plus, if you think about it, if one of these things happen to you, the chances of you dying sooner go way up. We call that reducing your life expectancy. Recently we quoted monthly premiums for protection like this of less than $45 for a month for a 35-year-old male in really good health, and that's for $500,000 worth of coverage. That amount's guaranteed for 30 years. And it would have been less than $37 for a female that was 30 years old in really good health. A 40-year-old in good health female would have been less than, for $500,000 in coverage, would have had a premium of less than $77 a month, and less than 102 for a 40-year-old male that's in good health. And that amount's guaranteed for 30 years also. Think about that. That takes them up through age 70. Lesser terms drop the amount, the amount of the premium, and so do lower amounts of coverage. A 45-year-old male in really good health pays less than $132 a month for a 30-year guaranteed payment on $500,000 worth of coverage. A 45-year-old female in really good health would have paid less than $104. So that takes them up to age 75. A 50-year-old female in really good health pays less than $178 per month for a 30-year guaranteed payment. That takes her up to 80. That's for a $500,000 in coverage. It's less than $214 for a male that's in 50, a 50-year-old male that's in really good health. Now, as you can see, the older you are, the more the premiums would be. Also, if your health isn't as good, okay, premiums would be higher. Now, these policies have guaranteed terms of 10, 15, 20, 25, and 30 years. Plus, you can also convert them to a permanent policy without qualifying medically up to your 70th birthday, or when the term runs out, whichever comes sooner. Okay. Now, the premiums on the permanent policy would be higher, but the coverage would be permanent. All right. So here's the deal: you can get a ton of protection for not a lot of money, and if you want to make sure that it's there your entire life, you have that option too. And these premiums are just a little bit higher than an old term life policy. Okay. Now, these new life insurance policies provide protections for so many things other than death, so many things that you're much more likely to utilize their benefits for. Whereas those old term life policies, there's really less than a 2% chance you'll use it. Plus, don't you have to die for that one to pay off? Now, the goal of this week's Your Money Matters was just to get this information out to you, so you now know that there's an affordable way to provide a heck of a lot of protection, financial protection for you and your loved ones. Okay. I tell you what, if you have one of those old type term life policies that you've gotten within the last 5 years from a list of, we have a list of 60 approved carriers, there's a good chance you won't even have to qualify medically for the new policy. It might even make sense to keep that old policy to make sure you have ample coverage if you don't die right away and you use up the protections in this new term life policy with living benefits. If you'd like more information about this, you can check out www.helpprotectmylovedones.com. Or for those of you that are maybe older and the kids are gone and you're not so worried about that type of protection, but you're worried about just maybe how you can pay for your care, to www.helpmepayformycare.com. They're up there on the screen for you. You'll be able to register for information there, or you can call me direct at my direct number up there or my email up there. You can even schedule an online appointment with the information that's up there. So if you think this sounds good, please, first of all, if you think this sounds good, make sure you contact me or check out the information there that those options I gave you. But also, please share this link with friends, family, coworkers, really anyone you care about. Anyone that you know wants to make sure that their loved ones and themselves are financially protected against these huge what-ifs in life. So I hope you have a great week. Make sure you tune in next week to Your Money Matters. Thanks for stopping by.